Morning. Can you all hear me okay? Great. Uh, at long last, it's a beautiful day here in Glasgow. Like it's been raining for the past 3 months. Um, so I've got someone to come fix the washing machine today. So apologies if I have to step out for 2 or 3 minutes midway. Um, but this is just a trade review, and I've got some kind of bits and bobs, some trade ideas from you, some trades, questions you sent me, and a trade of my own as well, which I thought I'd just go through. So let's get into it. Okay. Um, this is Bitcoin. Nice trade idea here. You said your limit missed by a few dollars here, but you've got this relatively fresh or untested pocket of liquidity up here, which you've marked out, and a really nice move into the level. And note that although that looks quite impulsive, it's not unusual for the price to run like that when it's moving through an area like it's moving through on the left. So this is a test of that. That's 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 a test of that. And above that, you've got this gap or void in price. So this move is not unexpected, okay, because that area is totally compressed, and as a result, you get that illiquid move into the level, and then a quick response, and yeah, price ended up retracing this entire move. Okay. During our last meeting, we were discussing the top in gold price from 25th of June on the 1 hour time frame. You told me about a first trade opportunity, but we didn't focus on it. That got me curious, so I went down to the 5 minute time frame to look for it and tried to put your words in the chart. The result was a 6.7R trade that was open for about 4 hours. Okay, I'm pleased to see that you're zooming in and exploring those areas, because that's how you're going to discover the kind of nuances you might otherwise miss. Anyway, this was a section of price action we were discussing. This is gold, and I just started by explaining that when price is up at a pocket of liquidity, which you can't see on this time frame, but which is on the left somewhere and which appears on something like the daily or weekly. Okay, so price is up in that daily liquidity. You don't want to be looking for longs on the hourly or the M30 or whatever this is. You want to be waiting for shorts. Okay, to be watching for the pockets of liquidity which price left behind as it ran up into the level on the lower time frames, and waiting for those to start failing. So I'd be tracking these areas of consolidation and waiting for them to start breaking, and this right here is your first kind of break in market structure. Then price breaks down, it retraces, and it carries on down there. So this is an FTR right here, and it's in here. You should be looking to short the market, expecting continuation. But as you say, that there was an opportunity up at the top here before that FTR even formed, and that is on a test of this high. Okay, price has broken the nearest support there, and you can see at this point that there's still fresh or untested liquidity up at this top. Okay. So this is what you sent me. And of course, this is all in hindsight, but what you've done here is zoomed in on the M5 and found this really nice trade idea, which I think is quite instructive. You can quite clearly see that price is, when price broke down here, this is the structure you want to see break on the M5. That's your FTR. And when price broke down, it never came back and tested this area up here. Okay, that's the area from which price left this FTR with good momentum. So that's your entry, and you're targeting the bottom of this swing there. That fresh pocket of liquidity down at the lows. And I'll go into this in a lot more detail in the webinar on scale. But in this case, what I'd probably do is leave half on and try and run the trade down on the higher time frames, because if we look back at this chart, prices hit daily liquidity. Okay, some structure on the left which is appearing on the higher time frames. It's engulfed. It's engulfed this liquidity here on the hourly or the M30. I can't quite remember. And so I would be expecting price to move down through this low now, okay, to the next pocket of fresh or untested liquidity, which is down here. Does that make sense? So you're looking for the engulf on the hourly in this case, zooming in to the M5 to refine your entry, and then you're trying to run the trade onto the higher time frames based on the higher time frame structure. Okay, because although the entries on the 5 minute, the trade idea here is derived from the hourly. Okay. In this case, price did come back up and test this FTR for a second time here. And again, it gave you another really nice entry on the lower time frames. Again, you're watching these areas of consolidation, okay, as price moves up. It approaches the highs of whatever kind of range it's trading in, and when these start breaking down, you're watching for bearish FTRs to form, in this case here, okay. Price breaks this flag limit, retraces, and continues on down. We're watching for these to form and shorting retests of these areas up in here. So yeah, very good. And in this case, I see you are targeting that hourly level. So good stuff. Okay. This is Ethereum USD on FTX, which is a relatively new exchange. And I see you've just been kind of tracking price here, marking out relevant structures. The first thing which I notice is that this here isn't technically an FTR. I'll get a clean chart up just so I can explain. So you've marked out this structure here. Um, but you can see this hasn't broken whatever liquidity in here on the lower time frames is holding price down. So, when that gets engulfed here and price retraces before carrying on up, this is the first structure which I would describe as an FTR. Okay, but as I say, the names aren't important. What's important is that you're identifying the presence and or absence of liquidity here, and you're right, there is a fresh pocket of liquidity down in here. Okay, which you can see held price up when it retraced, and again here price breaks out, it retraces that thin or illiquid move. Where to? Well, it stalled down here. Okay, the extreme of that FTR. After having kind of stalled at this right here, which is the area from which price left with good momentum. So it consumed the liquidity in there and then dropped through to the next fresh or untested liquidity down at the bottom there. Two really nice examples of compression here, by the way. Okay. Sorry for these markings, but you get the idea there. And you can see how quickly price moves through those areas. Okay. Expected bullish reaction, but failed to provide higher high. How do we anticipate this? Okay, well, you can never truly know whether or not a level is going to hold. As I say, it's all about playing the probabilities and taking trades with favorable risk to reward. But one kind of clue here that buys a week is simply the length of time for which price sat on that level. Also note how the entire level got consumed there. So in this case, if price starts finding sellers up in here, it's reasonable to assume that this level here is going to break next time price comes back, because it's been totally consumed. One other thing to note is the high time frame structure here. As I mentioned, I'll come into this in more detail in the webinar and scale next week. But see how price is kind of trending down on the higher time frames, right? Okay, it's breaking lows, and this is the section of price action you have annotated, and see how it's retraced that illiquid move, and it's now up at this area here, the area from which price left with good momentum. So it's up at this the area from which price left this higher time frame FTR. So in this scenario, I'd be wary of looking for longs or expecting levels to hold anywhere up at the top of this section of price action. What I'd rather be doing is looking for clusters of buy side liquidity to start failing on the lower time frames, and then looking for shorts. Does that make sense? That when prices at a high time frame level, you can usually expect the higher time frame kind of trend to to sort of take control and for levels in the lower timeframes to start failing. Because when you're up at a higher timeframe level, the probabilities are quite high that buyers are starting to get weak there, and that price is coming into some more significant sellers. Okay. And indeed, price starts breaking down, and you've just made a note of the FTRs there, and look how well price responds to these little areas, the areas from which price leaves with good momentum, the areas from which price breaks out of those structures. This here, FTR7, this isn't an FTR because it failed to make a lower low. Okay. Expected bearish reaction, but failed to provide higher high. How do we anticipate this? Again, you can't always anticipate it, but we go back to this high time frame chart. This will be responding to something on the left. Okay, so again, we're down at the higher time frame lows. So sellers are likely getting weak, and in this scenario, it starts becoming more likely that those clusters of sell side liquidity on the lower time frames are going to start failing. So again, it's all about context. Okay. You said we focus on higher time frames more, so do we anticipate lower pull to be more magnetic? I'm not quite sure what you mean by magnetic there, but yeah, I would expect more liquidity to be pooling at that area than in that small kind of structure you've marked out above. So yeah, in that sense, you might think of it as more magnetic, in that price is more likely to cut through this small area of consolidation here. I also want to make a quick point about this structure up here. See this thin or illiquid move, price finds support, and then it starts flagging out. Okay. And it appears as though on this time frame, this flag limit there is has been broken. But what I'll usually do when marking out flag limits is go down to a much lower time frame to see exactly where the limits of that flag actually are. So what I've done here is just I've just marked out this high, okay, the high of that FTR, so that you can see exactly where that break occurred. And if I go down to the M5, you can see here that this was the break, that's where the high got broken, and this right here was the deepest retrace. Okay, that's where buyers came in to support the market after that thin or illiquid movement. So that's the lower boundary of a flag limit, or at least how I'd have it marked out. So you can see that although it appears to have been engulfed on the H1, price never actually broke below that level. So that's just another kind of nuance to bear in mind. When there's a very thin or illiquid move, it's often worth zooming into the lower time frames because those lower time frame levels tend to be quite responsive. Anyway, sorry if I rambled on a little there, but those are my notes on that section of price action. Okay. I liked how price was going into the level until it stopped a few points away, ended up closing because I thought it was going to smash through the level, ended up hitting and missed yet another trade. Okay, this is Bitcoin again. And yeah, just a couple notes here, which I sent you on Twitter. The first is that price hasn't hit any significant sell side liquidity. Sorry, buy side liquidity in here. Okay, and below that you've got this gap. So the chances are quite high that price is going to come back and fill that in. The other point is that if you're ever unsure about how price is moving into a level, then what you can do is zoom in and wait for price to start breaking down on the lower time frames before getting in. For instance, go down a time frame if you're unsure about the way in which price is approaching the level, and wait for something like this in here to break. Okay, whatever structure is holding this small consolidation up. So it's the same process again, tracking these pockets of liquidity on the lower time frames and waiting for those to start failing. So you've got two options. The first is to hit price as it's coming into the level, and the second is to wait for that low time frame break in structure. But as I say, I'll come onto this in the webinar on Scale next week, and we'll cover it in a lot more detail. In fact, I think I've got quite a nice example of this in the next slide. Okay, I'm watching gold on the 1 hour, and I'm seeing a violent move, then a flag limit and a flag. Do you see the same thing? This is just a question I got sent a few days ago, but I wanted to cover it because it's a really nice example of the kind of order flow dynamics I've been teaching over the past few weeks. So yeah, this is gold. There's your violent move. Okay, price engulfs this low, and it retraces to that untested pocket of sell side liquidity up in there. And you'll note that this whole area is compressed. Okay, see how this was a test of this, and this was a test of this, and this was a test of this, and now price is kind of broken into that compressed area. And below that, you've also got this nice gap here. So that makes for a really nice target. So what I've done here is just narrow down or refine this area in here. Okay, you see that's the area from which price broke out of that tiny consolidation. So I've just zoomed in and marked that out. And again, you've got two options here. The first is to short it as it comes into the level. Okay, and in this case, that's an option as the approach was really nice and kind of thin, right? But unfortunately, this was coming into Asia, so I wouldn't have been taking a trade then. Not just because I don't trade that late, but because you often get this kind of price action, low volatility, sideways ranges. Anyway, the second option is to wait for that low time frame break in market structure, and in this case, you can see quite clearly that here's your flag limit. Okay, the area in price which was supporting this structure. And here's where it breaks. Price breaks down through this low, retraces, consolidates, and then carries on down. So this becomes your FTR. And when price comes back into that level, you sell it. And in this case, it retraced to the very extreme of that level, which is one of the areas at which we expect liquidity. Okay, before breaking down again, moving through that compression and into that gap in price I showed you on the H4. So yeah, I just thought I'd show you this because it's a really nice little section of price action. Any questions so far, or is that all clear? All good. Okay, XRP BTC, and here's the question. I'm a bit confused by this price action because it looks like a nice example of what we've been covering, a fast move down and an attempt to retrace back into the area of where it came from. Although I'm not sure if this move was so quote unquote illiquid because volume over time indicator printed quite big bars. However, it dumped back into the flag limit immediately and even went below the flag limit. Not sure if I should cut it ASAP, place a stop higher, or just wait. Also not sure if the fundamental situation is a good one with Swell Conference happening right now. Okay, and here's the chart again. I remember I covered this a couple of weeks ago and made the point that that this looked relatively weak to me. And I didn't explain why at the time, but you should now be able to identify that in there as compression. Anyway, you were also right in pointing out that this flag limit here, which you've got marked out, which you can't quite see on this time frame, but which is quite clearly visible down on the M5 or M15. You made the point that that was also starting to look quite weak. You can see here it's been tested multiple times and eventually broke. But there are a couple of points I want to make here. The first is that my target here would be a little lower than what you've got marked out here, because you can see there's likely liquidity down in that area. So if I were to take that trade, that would be my target. The second point is that I'd rather be looking for shorts here. The reason being that if you if you look at context, okay, Um, price has just broken market structure, so it's quite clearly found some significant sellers up in here, and or buyers have dried up. So in this scenario, not only are the high probability high R trades that are downside, but you'll find that flag limits like the one holding down this structure are likely going to be quite strong. Okay, because price has just found higher time frame sellers, and so these flag limits with the momentum often make for great continuation trades. So, if this structure had appeared a lot further down on the kind of curve, right down at the lows, down at some high time frame liquidity base, I'd be much more inclined to take this kind of trade. I think you longed in here, targeting up in here, and you can see what happened, because when price is moving with momentum, even very tiny pockets of liquidity in what looks like a relatively illiquid leg, they have the potential to be quite responsive. So I've got a couple of examples from Bitcoin here just to demonstrate. So this is the 3K low. It's found buyers and or sellers have exhausted. It breaks market structure here. Okay, that's your momentum. And so even though this leg is illiquid, okay, I'm expecting for this flag limit here to hold, because we've just broken out. We've just broken out from the lows, and you can expect for buyers to be strong and sellers weak. And yeah, Bitcoin again from last year. Price breaks out from this bottoming structure, thin or illiquid move. There's your flag limit. But I'm expecting this flag limit to hold. These are great areas from which to look for continuation. Does that make sense? What the difference is there between those two examples and the that XRP chart? Again, it's about context. In this case, the momentum's fresh. Okay, when price is starting to look exhausted, that's when we're looking for these flag limits to start failing. Up in here, for example. Okay. Okay, as for your question, I caught the wick in the red circle and opened along. The target is the retrace of the illiquid move down on October 25th. Now price went above the flag limit but retraced immediately back into the flag area. False breakout. As of now, I left my stop at the original position. What would you do with this trade? Now, I know it's easy to say in hindsight, but for sure I'd be cutting this as soon as price breaks out here, and then and then fails above those highs. Okay, so one kind of thing I always bear in mind is that if price isn't doing what you expected, then it's time to get out. So this candle here is relatively illiquid, and yet price has immediately failed and engulfed this liquidity in here. Okay, something isn't right. And below that, as I say, price is relatively compressed, and you're also going to have trapped order flow up in this failed breakout, which will likely drive prices down. Okay, but that's something I'll talk more about in the webinar on false breaks in a few weeks. So yeah, if price isn't doing as you expected, it's often a good idea to get out and reassess, because either you're not reading price right, or you've missed something potentially significant. Okay. Right, this is a recording of a trade I took on Euro GBP during the last mentorship, and I just thought I'd include it here so that you get to see what a trade looks like from start to finish. So you can see the you can see the high time frame context here. Price has broken these long-term highs. This is a daily chart, by the way. It's formed an FTR. Okay, pushed up, retraced, and continuation. It's pushed up, and then it's broken back down through the low here, back down through that FTR. And so, given that we're into this relatively thin or illiquid leg, I'm now anticipating that price will find resistance somewhere up in this daily liquidity base. Okay. So that's the context here. So this is the daily level, and within that, you can see I've just marked out portion of the area from which price left with good momentum. Okay, and see, price appears to be kind of trending up here on the lower time frames, higher highs, higher lows. But in this case, I'm not afraid to fade that, because the high time frame market structure is bearish, and in this case, price is simply kind of drawing back into this thin or illiquid move. So this blue box up here is the area I'm interested in trading at, and you've also got this nice kind of thin move up into the level here, right? There's no basing, no significant basing anywhere in this leg. So it looks quite thin, and so I'm expecting that to get filled quite easily. And I just marked out this base down here. Although I expected this to move lower, that base was my first target. And at the time, it looked like a relatively good spot to take profit, as you can see the kind of top portion of that level has already been tested twice, but the bulk of it remains quite fresh. So I'm just watching price as it kind of runs up into the level. And when it tags it, I just sell at market, and my stop goes above the liquidity base there. And as I say, my target's that fresh liquidity at the lows there. Okay, I think that's pretty much it for this. I'll move on to the next part of the trade. Okay. So I think I held this one overnight, which is fairly unusual for me, but um, I'd already taken risk off the table, so I was quite comfortable holding onto this one. And you can see that it kind of fucked about for a while, which is typical of the Asia session before finally breaking down. And there, I'm just moving my stop down uh, above this low time frame structure. Okay, and that's just to lock in the majority of my profit, because the lower this gets, the higher the chances of it reversing on me. So risk reward is a movable feast. It's an evolving concept. Okay, I'm not leaving my stop all the way up here because I'm risking 5 or 6 R. Then does that make sense? So what I'll usually do is track structure on the lower time frames, and as price approaches my target and the chances of it reversing become higher, I'm moving my stop down with price to lock in profit. In this case, just above that, there's the low that got broken. Price broke it, retraced, and then carried on down. So just above that low time FTR. I'll skip to the end here. And you see price eventually hits target for about 6R. There you go. Okay. Excuse me. This is Bitcoin on the M5, I think. I don't really have any comments on this. You're looking at all the right areas, and this down here in particular is a really nice trade idea. It's engulfed the lower boundary of that FTR there. And so price has room to move into, and you're looking to sell it at this FTR up here, and to run it into the next pocket of liquidity, which is down in there. So yeah, keep it up. You're looking at all the right levels there. Okay, this is Litecoin USD as far as I remember. And again, another nice trade idea. This one based, I presume, on this pocket of liquidity in here. Still relatively fresh. And the what looks like the compressed area of price above market. Okay. This area in here looks relatively compressed to me. In this case, I would favor entering at the level, okay, at this pocket of liquidity, rather than waiting for a break in market structure like you have marked out here, okay, because that break comes in here, low, high, lower, low, lower, high. That would be your break in market structure, and if you were to wait for that to break, it looks like price is already kind of bumping up against this in here, which is one of the only kind of untested levels in this whole range. So it's already kind of bumping up against that first trouble area. You've just also got a really nice risk reward down at the low there, given how tight the level is. Anyway, otherwise not much comment on this. Apart from that, I'm happy to see you incorporating these concepts into your trading. Okay, this is an interesting trade idea here on Bitcoin. We're at a really critical point in time here, I think, and I must say it's not all that clear to me. And you're right, price has where am I? Broken down through this flag limit, which I would mark like that, including the wicks. And that on the weekly chart, I go to the next slide, market structure is bearish, okay? Low, high, lower, low, lower, high, basic stuff. Lower, low, could be a lower high. Okay, so on the weekly chart, market structure looks bearish. And for the time being, prices basically constrained between the bottom of this weekly FTR and whatever liquidity is left in this consolidation up here. It's actually just poked through that FTR, so another argument in favor of shorts here on the weekly. But on the daily chart, things appear quite different. Largely as a result of the news out of China, we got this massive move a couple of weeks ago. So prices tagged the bottom of that weekly FTR, and that there is your break-in market structure. Okay, low, high, lower, low, higher, high. Okay, on the daily, market structure is bullish. Okay, so on this time frame, I'd be more inclined to look for continuation here. That being said, we just don't know where this is going. So your best bet is, as always, to look for trades with favorable risk to reward. And in this case, you've got fresh or untested liquidity down in here at 8,800, 8,600 to 8,800, which I'm looking to long if price gets down there. But unfortunately, this area up in here, this whole area is relatively messy. Usually I like for there to be some kind of substance to the level, and in this case you've just got that wick to work with. This FTR you've marked out here is kind of irrelevant now as far as I'm concerned, because price has already engulfed it. But if you look down on the lower time frames, there's a nice level up in here. Okay, see that went untested, which I presume is what you've got marked out. That being said, because that level is only apparent on the lower time frames, and as a result of the length of time for which price is consolidating or basing out here, I'd be reluctant to take a touch trade at a level like that, which just isn't all that clear to me, because we may well get a large influx of order flow and a breakout of that consolidation. So for sure, it's a good idea to be watching approach on this idea. and even waiting for low time frame breaks in market structure before you jump in short. So what I'd be doing is waiting for price to approach the level. As long as it's not impulsive, I'm waiting for the same thing as always. Buy side liquidity on the lower time frames to start getting taken out. Is that clear? Great. Other than that, I like your approach here, trading the extremes, and I like your targets. These areas of liquidity above which you've just got fuck all, basically. Okay. Finally, a trade idea I got sent last night. This is Litecoin Bitcoin on the H1, and again, I really like the idea. I get a high time frame up. You can see that we're up in this area here, a little messy because of this wick, but we're up in the area from which price left this FTR with good momentum. Okay, low, high, lower low. For that low time frame break in market structure to go short. Anyway, zooming back in to the M15 here. And this is kind of what I see here. High, low, higher high, higher low, higher high, higher low, higher high, lower low. So there's your breakdown. A sign that buyers up here are drying up. There just isn't enough buy side liquidity to satisfy the demand of sellers who've come in at that higher time frame level. Price hits this pocket of liquidity, retraces, and carries on breaking down. So clear this up. On this time frame, that's your FTR, and would usually be the first place I look to short with a stop above whatever it was on the very low time frames which held that FTR down. So that structure there. And if you look down on the M5 or the M1, it will probably you probably have some small levels there. So that's where my stop would go. Whatever the structure is, which is holding the FTR down. Entry here. Okay. But let me see. In this case, I actually prefer your entry up at the top. Okay, I think you had this marked out. I actually prefer your entry here because let's see, if we look again on the higher time frames, I think this is a 6-hour chart. You can see that we've hit this pocket of liquidity in here, okay, visible on the H6 or whatever this is, and so we can expect a retrace on the same time frame. Okay, so because price has hit this pocket of liquidity visible on the higher time frames, shorting that first structure I marked out on the M15, that would be what I referred to a couple of weeks ago as banking on the immediacy of a move. Okay, we're too zoomed in. So prices hit liquidity on the higher time frame, and so we can expect to retrace to an area of liquidity which appears on the same time frame. Let's see. Yeah, so if price were to make it up here, I'd be selling it there, and the same again, stop would go above whatever structure is holding down this broader structure on the lower time frame. So I'll be marking that out. In this case, it's more or less the same level, but it's above this area here, which I'd keep my stop. And yeah, I'd be targeting the next available buy side liquidity, which is down in here. See, that never went tested. And in this case, I'd probably also leave half on and try and run it down to fill in this gap. Okay. The idea being that market structure is bearish, sellers are moving down with price, and buyers getting taken out, and so you can expect these areas of buy side liquidity to start failing as long as that quote unquote trend continues. So yeah, what I'd probably do here is split my position into take half off here and try and run the other half down to this the next pocket of buy side liquidity. And the beauty of this way of trading is that you can afford to lose a couple of trades. Let's say you'd shorted this you'd fail to zoom out and note that we'd hit a pocket of liquidity which appears on the higher time frames. You can afford to lose one or two because these are the risk reward is so good on these trades. These are 8, 9, 10, 11 hour trades. And that's where the money's at. So while I'm at it, yeah, I just wanted to show you this section of price action, which I just spotted on the M1 while I was looking at Litecoin there, because it's such a beautiful example of compression. We start from the lows here. This came down and tested this. That tested that. 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 This got tested by that. That got tested by that. That got tested by that. And so on and so forth. So price stalls up at here, the area from which price left with good momentum, grinds higher into this next little untested pocket of liquidity. Okay, once it's found those fresh sellers, where are the buyers? You can think of this area as a void in price because all of that liquidity has already been consumed, and as a result, price moves through that area very quickly. Okay, that's all for today, unless anyone has any other questions. Thanks for sending me your charts. Bartek's asking, do you ever play volatility? Do you mean options? I don't know. No, I don't mess around with options. Great. I'm glad it was helpful. Um, so the next webinar will be on scale, trading flow, and managing expectations, and that will be next Friday at 10 a.m. And it's a really important one. And what I'm hoping is that it will tie a lot of stuff together for you. So that's next week, Friday at 10 a.m. Someone's also proposed that I set up a Telegram group for you all to discuss ideas. I've always been quite kind of reluctant to do something like that because I find these groups tend to be quite unproductive. But if that's something you'd like, I can quite easily get that set up. That way you can kind of bounce ideas off each other, and if you've got any questions, you can just post them in there, and I'll jump in every now and then and answer them for you. Is that something there's people want? Yes, no. Okay, why not? Okay, what I'll do is set it up, and if it's yeah, if it works, then great, and if not, then we can just get rid of it. Okay, so as usual, I'll send a link out later on today so that you can arrange a time to meet if needs be. But otherwise, I'll see you all next Friday.